It's a wonderful day to you all. Welcome to Nifty Sense. Stop. Pause the video. Look at your portfolio. It's bleeding, isn't it? The Nifty is down 250 points. The Sensex has tanked nearly 800 points. The WhatsApp groups are screaming crash. They're telling you that Donald Trump is about to destroy the Indian economy with a 500% tariff on Russian oil users. If you sold your stocks today based on the headline, you just made the biggest mistake of 2025. Because while the retail public, the sheep, were panic selling Tata Steel and Indelco, the smart money, the DIIs, were doing something very different. Today, FII sold 1,500 crores. But guess what? Domestic institutions bought nearly 2,900 crores. They aren't catching a falling knife, they're buying the rotation. In the next 15 minutes, I'm going to show you the hidden narrative of January 8th. I'm going to show you why the Trump crash is a lie and reveal two specific stocks, one in pharma, one in electronics, that actually made money today while the market burned. Welcome to the Contrarian Report. Let's discuss the fear, the rumor hitting the market is simple. President elect Trump supports a bill to slap 500% tariff on nations buying Russian oil. The logic is India buys Russian oil, India gets sanctioned, Indian economy collapses. That's why oil and gas stocks like ONGC and metal stocks like Hindelco cracked 3 to 4% today. But here is the secondary impact, the level 2 thinking that the news anchors miss. If India is squeezed on imported oil, what does the government do? Do we stop driving cars? No. We accelerate domestic alternatives. Every time the US threatens oil sanctions, the Indian government doubles down on two things: bioenergy and domestic manufacturing. The dark horse sector quietly accumulating today wasn't tech or banks, it was niche biotechnology. Why? Because disease doesn't care about tariffs, and domestic manufacturing doesn't care about oil imports if the demand is local. The market didn't crash, it rotated from global dependent sectors to Indian first sectors. Let's look at Exhibit A. Panacea Biotec. While the Nifty was struggling to hold 23,600, Panacea shot up over 12% intraday. Why? This isn't a pump and dump. This is fundamental innovation. Today, they announced the completion of phase 3 enrollment for dengue all. Why does this matter? Because dengue is a scourge in India. There is no effective single shot vaccine. If this trial succeeds, and the market is betting it will, Panacea isn't just a pharma company anymore. They become a monopoly utility provider for public health. The value moat. Look at the volume. It's five times the 10-day average. This is what we call a breakout on divergence. When a stock rallies on a day, the index crashes. It means the buyers are desperate. They aren't waiting for a market correction, they want it now. This tells me that institutional conviction here is sky high. If you're looking for a stock that is immune to Trump's tweets, this is it. Now, let's talk about the shield. Dixon Technologies. Most people think tech stock sell it, but Dixon isn't it. It isn't IT service, it's hardware manufacturing. Today, Dixon showed remarkable resilience trading in the green, plus 1.8% to 2.4% intraday, while the other mid caps bled out. Why? Because of the PLI defense, production linked incentive. Think about the Trump tariff. Logic again. If Trump puts tariffs on imports to the US, that hurts Chinese exporters. But Dixon manufacturers in India, for India, they make the Xiaomi phones, the Samsung washing machines, the GeoBharat phones that you buy. The order book mode. We are seeing unusual delivery volumes, nearly 40% higher than average. This suggests that DIIs, which is mutual funds, are parking their cash here. They know that even if the rupee falls or oil rises, The Indian middle class will not stop buying phones. Dixon is the ultimate hedge against the global trade wars. His Make in India bunker. I want you to burn the image into your brain. The red bar is foreigners leaving, the green bar is Indians buying. This trend has been consistent for months. The weak hands are leaving because of geopolitical fear. The strong hands are accumulating because of domestic growth. The Nifty 23,500 zone is critical support. As long as DIS keeps absorbing the selling, we are in the time correction, not a price crash. The narrative is shifting from global growth to survival of the fittest. And the fittest companies are the ones serving the 1.4 billion people right here at home, our India. So, what do you do tomorrow? Do not sell your high quality stocks in panic. Avoid metals and oil marketing companies for the next 48 hours until the Trump rumors clarify. Watch Panacea Biotec for a dip. Consider the innovation. Accumulate Dixon on weakness. Consider the domestic consumption story. The market is red, but my portfolio is ready for rotation. Is yours? If you want my full list of Trump proof stocks, hit the subscribe button. I'll see you on the trading floor.